Most people think investing is complicated. Index funds, mutual funds, ETFs, hedge funds, it sounds like a completely different language. And that's exactly why most people never start. But here's the truth. Once you understand one simple idea, everything else clicks. So in the next few minutes, I'm going to break this down in the simplest way possible. No jargon, no confusion, just real understanding. And by the end of this video, you'll know exactly which type of investment actually makes sense for you. Let's start with the foundation. What really is a fund? Imagine this. You and 100 other people decide to invest. But instead of doing it alone, you all put your money into one big pool. Now, that pool is handled by professionals who invested across different things: stocks, real estate, bonds. You don't have to pick anything. You don't have to manage anything. You just own a piece of the whole system. That's a fund. The first type, index funds, the set it and forget it strategy. Now here's where things get interesting. There are two ways to invest. 1, try to beat the market. 2, or just be the market. Index funds choose the second option. Instead of trying to find the next big winning stock, they simply copy an entire market. For example, instead of guessing which company will grow, they invest in the top 500 companies all at once. So if the market grows, you grow with it. No stress, no guessing. And here's why people love them. They're cheap, like insanely cheap. We're talking almost nothing in fees, which is why even billionaires recommend them for most people. But there's a small catch. You don't control the exact price you buy or sell at during the day. Everything happens at the end of the trading day. For long-term investors, not a big deal. Mutual funds, the expert picks for you approach. Now let's flip things. What if instead of following the market, you hired someone to try and beat it? That's what mutual funds do. They have professional managers constantly buying and selling, trying to outperform everyone else. Sounds better, right? Well, not exactly. Because higher effort equals higher fees, and higher fees equals lower profits for you. And here's the uncomfortable truth. Most of them don't consistently beat the market anyway, so you're paying more for uncertain results. Still, some people prefer them because they trust the strategy or want something very specific. Hedge funds, high risk, high power, not for everyone. Now let's enter a completely different world. Hedge funds. This is where things get aggressive. These aren't designed for everyday investors. They're built for the wealthy. And the strategy? Anything that can make money. Betting against stocks. Borrowing money to invest more. Complex financial plays. This can lead to massive profits, but also massive losses. And the fees? Brutal. You pay them just to manage your money. And you give them a cut of the profits. So unless you're playing at a very high level, this isn't your game. ETFs, the flexible hybrid. Now this is where things get interesting again. ETFs are like the middle ground. They combine the simplicity of index funds with the flexibility of stocks. That means you can buy and sell them anytime during the day. Unlike index or mutual funds, where you have to wait, they're low cost, diversified, easy to trade, which is why they've become extremely popular. So, which one should you choose? Here's the honest answer. If you're just starting out, you don't need complexity. You don't need high-risk strategies. You need something simple, consistent, and proven. That's why most people are better off with index funds or ETFs. They're easy to understand, low cost, and built for long-term growth. Everything else, that comes later, if you even need it at all. Final thought. Most people delay investing because they think it's complicated. But now you see the truth. It's not about knowing everything. It's about understanding the basics and actually starting. If this made things clearer for you, you already have an advantage most people don't. And that's how it all begins. Now, if you like this kind of video, subscribe, like, and comment. We'll see you in the next one.